Yeah, good morning, everyone. Friday again, US market continued its decline and reached near to its June low, where it took some support. But today morning again, futures are down, whereas Asian market has also seen decline in most of the market except Hong Kong and China. Though there is a rumor that the Chinese president may be under house arrest, or some concerns are emerging from there on rumor side, but no confirmations from any of the official agency. As such, and even the market is also not reflecting anything like that, because markets are more of a positive over there. So it seems to be more of a rumor, but commodities are seeing further decline. Oil has corrected very sharply on Friday on concerns of, and now it is around $86, which is somewhere near to pre-Russia Ukraine war level. It has already reached near to that. And apart from that, if we see the iron ore is also down by around 0.5, and steel is more of a flat. Base metals are seeing larger corrections. Uh, the sharp oil decline will have some impact on related company stocks. Like Pant company may see positive trend, whereas the company which are producing oil, that is ONGC, Oil India and all, will see negative trend. I'll request technical team to take up first.
Yes, thank you. So, good morning, all of you. This is Swati. As said that the global markets are not doing very well, we are continuously witnessing selling pressure into the every market. So, taking a clue from the global market, our market is likely to open with a gap down, and we are likely to witness the selling pressure during the day. On Friday, Nifty has broken 50 DMA, which was the crucial support levels, and it has just closed below that level, which gives a cautious sign as of now. On the technical front, 17,200 will act as an immediate support level. These are the swing supports level. If it's break that level, the 17,000 levels can be tested, supported by its 200 DMA. So I believe that the selling pressure is likely to be intensified below 17,200 levels on the closing basis. Whereas on high side, 17,400, 17,500 will be the immediate resistance. Any move above that level on the closing basis and sustains at least for two trading sessions, then only we can witness some sort of a pullback rally which might take a Nifty towards 17,800 levels. The overall view is cautious. As I said, then higher side selling pressure is likely to be seen. One should be a stock specific rather than concentrating on the Nifty, because some stocks are really doing very well. So be a stock specific and trade each and every transaction with the strict stop losses. Coming towards the bank Nifty, 40,000 will act as the first resistance zones. Above that level, 40,280 levels can be seen. Whereas on the downside, 39,250 is the first crucial support level. Any move above that level, 39,000 level can be tested once again into the bank Nifty. Nifty Finance Services, 18,470 is the first resistance zone. Above that level, 18,600 levels can be seen. Whereas on the downside, 17,700 is the first support level. Below that level, 17,500, 17,400 can be seen. Uh, these are the important support and resistance level for three indices. One should remain a cautious on the Nifty and the Bank Nifty. Don't create major long position. That's it. That's it from my end. I requested that you guys take a call forward.
Yeah, thank you, Swati. Good morning to everyone and happy Navaratri. From the derivative front, a little bit of the data has changed. Most important thing is the India VIX has come down, has gone up for the first time after the July series to, above the 20 levels and closed above the same. That is one negative for the markets. Also, the other indicators like FIs have sold in both cash and derivative markets for the couple of trading sessions, and they have been huge amounts. So that is a sentimental negative as well. The open interest after going down for a couple of days has again shot up. Only silver lining or the good thing is the PCR has come down considerably to 0.75 odd levels. Below 0.8, it is an oversold zone for this indicator, and which is a good sign. Looking at the overall open interest amongst puts for Nifty, 17,000 has the highest put base, and looks like we will retest this level going forward. And what was a good support area, 17,500, has been broken on the Friday sessions. Also, the PCR has gone down above below one at the strike, so it is a negative. So, in all respects, at this point of time, looks like 17,000 will be retested, and then a bounce back can come in. All in all, the data is negative for a couple of days. Um, from the stock specific front, banking did see some selling pressure, and this selling pressure will likely continue in today's trading session as well. Some longs were built in, and now some liquidation have been seen. So, some more liquidations can be seen in major banks also. So, look out for the same. We believe Axis and IndusInd Bank are the weakest amongst the banks at this point of time, and they can see more selling than the other banks. So those are the banks that can be shorted. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Today, Harsha Engineers IPO will be listed. Price band was 314 to 330. We are expecting a good listing, and we had given subscribe rating. The total issue size is 755 crores. Fresh issue was 455, and offer for sale of 300 crores. Post listing, the market cap will be 3,000 crores. A business model is similar to Rolex rings, and company supplies one particular part of bearings companies, two bearings companies like Timken, SKF, Schaeffler. Uh, so bearings are basically made of four parts: inner ring, outer ring, and which is made by Rolex, and then there is a cage-like structure kept between both these rings, and within that cage there are balls which rotate. So Harsha makes those cages in which the balls rotate. This is a very high precision job, and Harsha commands a 50% market share in the domestic market and 6.5% share globally. Bearings cages is 75% of the top line for the company, while remaining 25% comes from other segments like stampings, castings, and solar EPC. In cages and stamping, the company makes similar margins like what other bearing companies make at 21%. However, around 11% of revenue comes from castings, which are made in Romania, where margins are low, and another 6% of revenue is coming from solar EPC, where company made negative EBITDA last year. So both these segments pull down the overall margin to 13% compared to 20% for peers. However, overall, we think that Harsha is a proxy play on rising global outsourcing of bearing components from in-house facilities of clients in Japan, Europe, US to India. Number two, relocation of global supply chains from China to India. And number three, a strong upturn in domestic industrial and auto segments, reflecting in strong growth and growth outlook provided by other bearing OEMs. So with increasing utilization rates, we think that, and plus turnaround in solar EPC business, also debt will be repaid with the fresh issue. So we expect ROC overall to improve from 17% last year to 20% in a couple of years. Harsha was being offered at a big discount to OEM bearing companies at 330 rupees. So we think there is good scope for re-rating at such a cheap valuation of around 15 times FY24. We expect stock to list at 480 to 500 rupees. And those who are allotted the shares in IPO should continue to hold them. There is another news on Motherson Group, which has acquired 100% of mirror business of Ichiko Industries Japan in an all-cash deal. So this will give Motherson exposure to Japanese market. Also, this company has plants in China and Thailand. Enterprise value is at Japanese yen 5.2 billion. subject to closing adjustment. The target business reported revenue of 15.8 billion in Japanese yen in 2021. So actually going by the acquisition size of 5.2 billion Japanese yen, that equates to close to 330-340 crores of Indian rupees. So that is a small acquisition looking at the overall size of Motherson. So it will be neutral for the company. Thank you.
Good morning, everyone. We met the management of CMS Infosystem, a recently listed company. CMS is India's largest cash management company and has 46% market share in ATM cash management, 36% market share in retail cash management, and 26% market share in cash in transit. Company is headed by Mr. Rajiv Kaul, who is the executive vice chairman and CEO. Prior to CMS, he was the CEO of Microsoft India at the age of 33. Over FY21 to 27, total addressable market for cash management in India is expected to grow at a CAGR of 19.1%. Managed services industry is expected to grow at a CAGR of monitoring tech, in which industry is expected to grow at a CAGR of 24.6%. We feel the growth in this industry will support the growth for the company. FY22 revenue grew by 22% and came in at 1589 crore, and the management plans to reach to rupees 2500 crore to 2700 crore revenue by FY25. That is at a CAGR growth of over 18%. Management seems confident in achieving 18% growth. EBITDA margin for FY22 stood at 25.2%. The company is a debt-free company and ROE stands at around 18%. Stock is trading at a PE of 12.2 times FY24 EPS. We are positive on the company. Thank you.
So apart from this, Suzlon has announced the right issue terms. That is, the issue price will be 5 and the company will be raising around 1,200 crore rupees. And the ratio will be 5:21. That is 5 share for every 21. So price seems to be attractive. So may find some positiveness in the Suzlon Energy. Apart from that, Netco Pharma has sent that they had launched chlorothalonil propel in Indian market, and this has a market size of around 2,000 crores. So may see some positive trend for Netco Pharma as well. Apart from that, ET has carried the news that Tata is reducing the number of listed company, and the small company will be merged in the large company. We had seen that Tata Steel has announced merger of all the small steel related company to Tata Steel, and that has reduced the number of the listed company. But apart from that, Tata Elxsi is also in similar business of Tata Consultancy Services. So there could be some possibility of that merger, and if that happens, then Tata Elxsi may find it as the valuation of Tata Elxsi is much higher than Tata Consultancy Services. So can see some negativeness on Tata Elxsi as well. Now I'll request commodity team to take up from here.
Thank you, sir. Good morning, everyone. We have witnessed dollar index again rising, so commodities are expected to remain under pressure. However, USD/INR could be supportive for the fall of commodities. Selling on rise is expected. Copper can be sold around 635, 636 level with a stop loss of 641. Again, if 630 is a crucial level, so if sustains below 630, one can also initiate a sell. Prices can test 623, 620 on lower end. Similarly, zinc also is weak below 275, 276. So any pullback can be used as a selling opportunity. Crude, we expect prices to pull back till 6,500 to 6,550. So whereby again it can be sold for a trading purpose. One can buy with a small stop loss below 63 63.70. But however, selling pressure could be witnessed from 65 to 65.50. So again, selling on rice is also recommended in crude. NG, we may see some pullback till 575, 580. However, selling pressure should be witnessed in NG also. Um, Gold, 49, 200 seems to be a support area, but however, profit taking from higher end is expected. So one can initiate a long, but profit taking should be witnessed from 49 600 till 700. So again, one can sell from there. And silver, if sustained 55.50, then one can initiate a buy with a stop loss below 54 900, and maybe 57 could be the ideal target, and it can be sold from 57,000 also with a small stop loss of 57,500. So that's it from me. I request Ria to take over from here.
Thank you, sir. Good morning, everyone. So, on the currency front, well, dollar index is trading at an all-time high, around 113.92. So, this is fueled by a few factors. Firstly, Fed strongly hawkish stand that it has given in its recent FOMC meet, that it will continue to be aggressive with its policy and the rate hikes as long as the inflation doesn't come near their benchmark rate. Secondly, we have seen euro area again, witnessing high inflation last month. So this will again push the euro ECB towards a rate hike, but taking into consideration the overall health of the economy there, they won't be as aggressive as Fed, and therefore will be lacking behind. And same sentiment is seen into the euro USD as well, which has fallen to 0.97, the lowest uh, that we have seen so far. Uh, Now, pound has crashed on Friday. The reason behind is firstly the Bank of England not going for a 75 bips rate hike, taking into consideration that their inflation is already at the highest peak. Secondly, the kind of uh, 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 as Liz Truss was elected as a new PM, and she has she came up with the tax cut. This has resulted that it could push the economy towards growth, but it will put a high dent into the overall current account deficit of the country, as well as will put a dent into their overall debt. The regulatory reforms that they had come out is about 161 billion pounds, which is quite higher than what was expected by the market. So this led to a crash into the pound because obviously, firstly, where all the central banks of the developed countries are putting growth on the back burner and are heading towards controlling the inflation. UK, though Bank of England is doing a rate hike, but it is not as aggressive as there is a requirement for it right now. Secondly, giving such package and tax cut could lead to the inflation remaining to be sticky at the higher levels. So thus, not a very good sentiment on the pound. And even in today's session, we have seen it crash. It is at the lowest we have seen, trading at 1.07 levels. USD INR has opened with a gap up at around 81.55, reflecting this strong dollar on the global level. The RBI intervention is less likely to happen because they have already poured in $100 billion from their forex to control the level of 80. And take into consideration the last two sessions, they are, I think, not protecting the 80 levels anymore. The support that you can see for the Indian rupee is at 81.32. If it breaches that, you can see some profit taking happening towards the level of 81, 80.74. Thus, keep 81.32, 81.30 as a level to go short into the USD INR. However, if it moves above the level of 81.62, it will head towards the target of 82. So keep a very strong follow these two support very strongly in today's session, the session will be volatile in all the pairs. Euro INR has opened with a gap down and it will continue to trade. So with that sentiment, it could test 78.40 to 78.38 in today's session. You can keep stop loss at 78.82. For the GBP INR, it has opened on a very deep bearish note at 86.98. Stay away from GBP INR right now because it will be very volatile. For the JPY INR, the Bank of Japan there has continued with the bond buying action, and this is quite diverting from the other central banks, and thus we have already seen USD JPY again heading towards 145. If it breaches that, it could further test the levels of 148, 149, and same could be seen into happening into JPY INR as well. The levels that you can follow in JPY INR is it is right now trading at 56.61. 48 is a level that you can go short into the pair for a target of 56.20. 56.10, the resistance for the day is placed at 57.20. If it breaches that, it will go towards 57.60. So, all in all, today will be a very volatile session into the currency. Please follow all the stop loss and the support that I have said in today's session. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.